going to try to make this a worthwhile webinar for you. So again, my name is Dave Wise, and I run a SPY Super System options trading room and text alert service that I'm in the room from market open to market close 5 days a week. I usually get there about 9:15 or so, go over the pre-market action, and then look at the trades that we've got on, make any adjustments to our exit prices, etc. And then I'm there till market close. So I'm there all day long, analyzing trades, suggesting trades, answering questions. I have lots of questions. We have hundreds of people in there asking questions, posting stocks they'd like to have looked at on the charts, etc. So that's I'm doing that as a day trader, and of course, as a short-term swing trader. I don't know too many rooms where actually have somebody in there actually answering questions and suggesting trades and going over charts all day long. But I've been doing this for a long time, so I really love doing it. That's what makes it so easy for me. I don't really consider this a job or an effort. I love trading and doing it for a long time. Okay, so we'll get started here. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, moving along here. If you have any questions along the way, now I'm going to leave the chat box open. David, do you do futures at all, or is it applicable? No, I mean, I don't typically trade futures. I trade stocks and options. I will trade the SPY, the Q, the IWM. I trade the indexes, but you can, using the methodologies we've got here, which is the SPY Super System, you can trade futures just as easily as you can trade stocks. It's just, and commodities, everything except FX. Foreign exchange doesn't work. They operate in pairs, different kind of structure on that type of thing. But everything else is perfectly geared to use. I have a PDF of how you choose your options, and how many days out, like 7 DTE or 0 TTE. Yeah, I'm going to go over that as far as when we're setting stocks up, but I don't have a PDF on it because it varies depending upon the conditions. All right, when's earnings coming out? How long you're planning on being on the trade? What kind of option premiums are there on the different expiration dates? You have to look at those and choose the best one. So it's a little bit nuanced as far as that's concerned. Do I trade 0 DTE or swing trade options? Ray, I'm going to talk about that. Most of the trades are structured as swing trades. All the trades that go out in alerts are swing trades and are structured to be. But I do 0 DTE trades on the SPY, the Q, the IWN, and even some stocks using the 5-minute chart during the day. It's called the SPY Super System methodology, and I'll cover that in the webinar today. Okay. All right. So again, if you have any questions, just pop them in the question box. I'll leave it open the whole time. If something comes up that I can't answer, or it's relative to perhaps a particular subscription, etc., you can call Rory at 786-732-4656, rightlinetrading.com, and he'll answer any of those questions. And I'll post this at the end of the webinar, so you'll be able to see it back then. Okay. Again, this is just a description of our graphic of the Compass text alert service. The Compass system is where the SPY Super System started. It's now called the SPY Super System. It's been enhanced several times, improved quite a bit, I believe. It's very, very effective. It used to be called the Compass, so we still call it the Compass text alert service, but it's actually on SPY Super System trades. And then you'll see it comes to your phone. I'm on the text alert service, so I know how long the text alerts take to get out. And I get them on my phone in about 5 to 10 seconds at the most from once the time we send them. Okay, first thing I want to cover, and I cover this every webinar, and so if you've heard this webinar before, you probably, it's going to seem redundant, but this is important because traders really need to understand something here. This is a market consists of many small retail traders, and this is us. This is retail traders such as myself and likely everybody else that's here. Right, hold on just one second. Okay, so market consists of a lot of retail traders, and we're talking about tens of millions of retail traders. And this is represented by these little marbles here. We're the little marbles. It's important to understand that the market consists of retail traders and institutions. Institutions, the big marble here, I'm going to talk about them in just a minute. But the critical thing to understand is when the retail traders are in the trades, but there isn't any consistency from from institutions. In other words, you don't have a lot of institutions driving the market or driving a stock in one particular direction. I mean, the institutions can be in the trade, but you can have some institutions selling, some institutions buying. So there's no confluence. But if you've got confluence and the institutions are driving a trade or a stock or the market up or down, this is what we're interested in. If there isn't any confluence in the institutional trading, then retail traders are the people that are doing the trading. All there is when retail traders are trading is basically causing chaos and chop. That's what you're getting, is a lot of chop. Very difficult to make money when retail traders are trying to move the market, because they can't. We just cannot move the market. Now, the institutions are made up of, let's see, question here from Namra. How do you prevent a losing in a trade like just what happened yesterday? Well, we'll talk about the information that we have to make a determination. That was a news-related event, and a lot of the news-related events will flip the market pretty badly. It's pretty interesting. As of yesterday, we had 4 trades on. We took one at break even, and we profited on the other 2 because they were structured for a market that could be impacted by news. And then we have one still on that's that's in really good shape. And I'll show you how we do that. Yesterday was a day that wiped out a lot of traders. Let's talk about that quickly. There was a news event on tariffs again. Now we're talking about another 100% tariff on China. This is what happened in April. If you remember that, there was a huge market pull down. It trapped a lot of retail traders, and they went short. And then the tariffs got paused after the bond rates ripped up higher, and they get trapped on the other side. The shorts got trapped. So you have to really be very cautious on these type of things. And the trades we take are all very high probability trade setups. And when the market is unsure, they're structured to be set up such a way using spreads, straddles, strangles, things like that, where you can withstand that kind of a problem. We'll talk about that. I mean, that's the strategies we use. I can't talk about that all at one time, but these strategies develop over years, and I've traded in a lot of different markets. Okay, so that's what we need to know. Now we need to know that the institutions are made up of obviously investment banks, Goldman Sachs, JP Morgan, Morgan Stanley. These are all investment banks, and these are big players, billions and billions of dollars to put into the market. And investment banks and institutions are made up of 2 different desks. They have a trade desk where they have humans making trades, which is a very small portion of their trades. And then you have algos, what they call their computer programs. These are algos that look for specific setups in the market. They look at news. They trade the news. When that news came out yesterday about the 100% increase on the tariffs, believe me, the algos knew about that as soon as it was released, way faster than anybody else could click a mouse, and that's why the market took such a quick drop right as soon as that was released. All right, so they've got algos that are moving the market, and they read news. They look at setups. They look at setups that retail traders use to be profitable, such as MACD crossovers, etc. Even Fibonacci's. They look at those, and they can create the conditions to bust those. So when retail traders get in, they can nail them and take them out. And they also know where anybody has their fixed stops. If you have a hard stock put on your trade, they know about that, and they can drive it through that stop by a few pennies and then bring it back up again. Now, there's also made up institutions that also have hedge funds are in there, mutual funds are in there, and pension funds are in there. That's the group that makes up institutions. Very important, and this is what drives the market. When they have some confluence, when they're in agreement on a particular move, we're going to see it in a SPY super system, and those are the trades we want to take. We want to basically just follow the institutions. When they aren't in the trade, we don't want to be in. We're not going to take our money from the institutions. We're going to take our money from other retail traders who don't have the same information that we do, don't have the same strategies and methodologies that we do, and they certainly don't have the SPY super system to tell them when institutions are in the trade or not. Okay, Now, this is a little bit off topic. I do want to cover this quickly. This is a blackjack table. This is a 8-jack of spades. That's a blackjack, couple $100 chips. And it seems a little bit off topic. I understand. But the reason I put this out there is if you're telling people, you've been never telling family and friends that you want to be a trader, you want to trade options, you want to trade stocks, we're going to tell you that it's a gamble. You can't beat them. Why you want to gamble your money away like that? So is trading stocks and options gambling? I mean, it's a good question. All right, it's valid. Most people lose money trading. But this is an analogy I use. And that when I was much younger, much younger, back in the heydays of Las Vegas, I made my living playing blackjack in casinos in Las Vegas as a card counter. Now, card counting is not as what it says. It's not counting cards. What you're doing is you're tracking cards as they come out of the deck. In other words, as the hands are dealt, we track how many little cards come out and how many big cards come out. Little cards being deuce through 7, and big cards being 10, Jack, Queen, King, Ace. And as the composition of the deck changes, as the cards are removed, the advantage swings back and forth between the house and the player and the house and the player. And by keeping track of what the composition of the remaining cards are in the deck, I knew when the mathematical advantage went in my favor, and I would make much larger bets, take more hands, etc. And when I went back to the casino's favor, I would bet the minimum on one hand. Right. So that's how we do this. And just as an example, the way this works is as the little cards are removed from the decks, the deuces through 7, if the remaining composition of the deck has a lot more large cards than it normally would, the advantage goes to the player. And if there's a lot more little cards in the deck than there normally would, the advantage goes back to the house and it goes bigger to the house. All right. So the reason I say this, trading stocks and options is very similar to in that without knowing what the institutions are doing, the trader doesn't have any edge. So in essence, they're gambling. And that's the difference here. And again, both trading stocks and playing blackjack as a card counter, they both require discipline and emotional control. This is very important. If you've got a methodology that works, and ours works 85 to 90% of the time, it still requires discipline and emotional control. This is what kills most retail traders, the inability to remain disciplined and certainly the inability to keep their emotions under control. Such for the word FOMO, is fear of missing out. Okay, now the SPAR Super System is our card counting system. Basically, this gives us an edge over the other traders, allowing us the ability to become consistently profitable. And the SPY Super System, in conjunction, knowing when the institutions are in the trade, in conjunction with identifying the best high probability trade setups based on additional criteria, can lead to consistent profits. So that's why I put this in here. All right, just to understand that this is, if you're using a methodology and a strategy and you understand when institutions are in the trades, you're not gambling anymore. You have a big edge over the other retail traders. Okay, now in the room we have a couple of rules we trade by. First one is we trade the best and skip the rest. This sounds really easy. These are the high probability trade setups that institutions are in, the best. Skip the rest. There may be setups that look pretty good, but don't have the particular criteria we need or the institutions aren't in them. We skip this. Now, these are trades that we may have taken if we didn't have this information, but we don't. And this is really important because this is probably more important than trading the best, because every trade that you don't take that would have been a loser it's just as much money in your pocket as the ones you take that are winners. So this is extremely important, and this is where the SPY Super System helps a lot. And the other rule that I trade by, and I say this in the room every day, our objective is not to make trades. Our objective is to make money. And this is directed at traders who overtrade. Most retail traders overtrade. So I focus on our objective is not to make trades, our objective is to make money. So we're only taking the very best trades, which means we have to be patient. A lot of time will go by without taking a trade because they aren't set up. And overtrading is a big problem. Traders get impatient, they get bored, they're looking for ways to try to take a trade. I need to be in a trade. They'll tell me that why did you take this trade? Well, I had a feeling, or this is just a small trade. If anybody tells you this is just a small trade, what they're telling you is they're gambling. They're not taking a high probability trade setup, but they want to have a trade on. Just admit it. When you do that, you're gambling. All right, you're not trading within your methodology. Okay, now maintaining discipline. This is really important. And what I mean by maintaining discipline is you have a methodology and strategies that you use, right? And then we use the SPY super system to enhance that. Maintaining discipline means sticking to that. Don't go off on some tangent on something that you saw on X or on some social media or you heard on CNBC. Don't start listening to stuff like that and taking those kind of trades. It's going to kill your winning percentage, and it's going to really hurt, especially if one of those trades works, because now you're convincing yourself that the strategy that is not a winning strategy is a winning strategy. So maintain discipline. Learn and follow the process is how we maintain discipline. The processes I'm going to go over. That's the criteria that we use to find high probability trades. You learn that and you follow that. It's important to learn it and internalize it, because that's what's going to make you consistently profitable. Watching your P&L is not going to do that. This is not about how much money you make or lose on a trade. It's being consistent and getting a long-term win rate. Okay? Remain patient. Again, this is directed at retail traders who overtrade. It's just everybody feels like they need to be in a trade if they're a trader. You don't. Sometimes no trade is the best trade. A lot of times no trade is the best trade. Okay, just an aside note, this big flush down yesterday off of that tariff news, we've had this news type market for a long time. The market is still very, very bullish. And a lot of people were very bearish in the market in the spring, thinking that the market should be correcting, and they were trading short and trading short, and losing. Then in the last few weeks, they've decided that the market's bullish, I'm going to jump in. And they jumped in because they were trying to make up for losses that they had back in the spring. And what they did was they took a lot of size, they took large positions on a lot of bullish trades. They didn't have them hedged by using spreads or anything. They were just long a lot of trades. And you can imagine what happened yesterday on that 900-point drop in the Dow. That was a huge drop in the market yesterday. Those folks got trapped and thinking to themselves, I should have stayed short. And they're probably going to think now they should stay short. But the market is not corrected to a point where we're in a bear market at all. We haven't even done a correction. We had one big red day. And just remember what happened in April. It did the same thing, and it flushed right back up again. So don't be one of those traders that gets trapped like that. Okay, and yeah, again, remaining patient, very important. All right, and as a profitable trader, we need an edge over the other retail traders that we're trading against. Our edges, major, SPY Super System software. Tells me whether the institutions are in the trade or whether they're not in the trade. And I'm going to show you these charts, and I'm going to show you how we find these trades both on a 5-minute candlesticks for intraday trades and on daily candles for swing trades. Trading relative strength and relative weakness. Another very poorly understood concept by most retail traders. A lot of retail traders think relative strength means you look at the RSI. Everybody talks about RSI. RSI, which is relative strength index, has got nothing to do with the stock having relative strength or not. Relative strength is when you look at the stock that you want to trade, compare how it's trading right now on spur and intraday trade, especially on a 5-minute chart. How is it trading versus the S&P 500? If the SPY is moving sideways and down, and you've got a stock that's going up and stacking green candles, you've got relative strength. It's going to perform better than the market's doing, and vice versa on the relative weakness side. That's what relative strength is. It's a comparison of how your stock's trading versus how the SPY is moving, right? That's what gives an additional edge to you. That's a big criteria right there. Trading with the market trend, if there is one, and buying near support and selling their resistance, very critical. This again goes hand in hand with being patient. Don't chase stocks when they take off or take off fast up or down. Wait for them to come back to a support level and bounce off of the support level if you're going long, and get in near that support. You've minimized what your loss is going to be if it goes against you. Stop people that have FOMO and they see a stock moving up in the morning, stacking green candles. They're sitting there watching it and figure like they're losing all kinds of money. Eventually they crack and they buy right near the top, and it reverses and comes all the way back down to support. And the folks who hadn't bought it but were being patient, wait for it to buy, they buy at support, it heads back up again. They're agreeing right away, and the person who chased it is basically probably bailing on this thing because they've lost so much money. Right, so very important. Buy near support, sell near resistance. Now the compass system, what is called the SPY super system now, this identifies probabilities, highest probability trade setups while sidestepping the setups that look good but will fail more often than they succeed. Very important. It does this by identifying when institutions are driving the move and when they're not. And it analyzes very complex trading data to get this information and displays the results in easily identifiable visual format. And this visual format, by the way, is really important because this makes it easy, even for new traders, to find high probability trade setups and certainly identify when institutions are in the trade and when they're not. And you'll be able to identify when institutions are in the trade way better than most retail traders that are in this market, since they don't have that information. All right, this is how we get an edge over other retail traders. We're only taking trades that are being driven by the institutions. I reiterate this quite a few times here already. Trading stocks that have relative strength or relative weakness to the SPY or the Qs, since if the market reverses, they're not going to get hit as hard, they're not going to drop as fast, they're not going to go against you as fast. So you'll minimize any losses you might take. And trade in the direction of the overall market trend if there is one. If there is one, there isn't always a trend. And how does it give us an edge? Well, our trades will be supported by institutional buying and selling. They'll be outperforming the index, and they'll be moving in the direction of the overall market if there is a direction to the overall market. That's how we get an edge. Okay, now the SPY Super System software, let me just explain, before we get into all the details of this, let me explain why this is such a critical thing. And we're going to talk about the results that we've had in the room. We have an 85 to 90% win rate, generally week after week, month after month, certainly month after month. Had a couple of months in the last 3.5 years where it was under 85%, but not very many. The SPY Super System, it's the critical element in finding and trading the highest probability trades. This is what makes you a consistently profitable trader, is to take a trade that's a high probability trade. Right? It's got much more likely to make money than lose money. The SPY Super System software is the engine that drives our exceptional results. And you'll see the results. Keep in mind when you see the results, this is the SPY Super System software. That is what's giving us the information to do that. The ability to identify when institutional players are driving a bullish or bearish move, and when they're absent, it's the key factor in pinpointing high probability trade setups. And that's the function of the SPY Super System software, and it's a critical component in being consistently profitable. Okay. All right. By the way, I do have a YouTube. Brightline has a YouTube channel. I broadcast on there every day at 11:30 for an hour. If you go on the YouTube broadcast, brightlinetrading.com YouTube, you'll be able, if you join the YouTube feed each day, you'll be in my room. You'll see the room. You'll see the charts. You'll hear all my questions and answers. You can ask questions and I'll answer them for you. All right. Now, and I just kind of threw this in here as kind of an aside. I did a video on the most common mistake retail traders make. And I have 11 of them. There's probably more, but I made all of these, believe me, in my career. But not considering current market conditions is really critical. And this is where folks may want to trade short on a stock, but the market's having a very bullish day. If you have to be aware of the fact that that stock has relative weakness, of course, and the market's going up, but your percentage win on is not going to be as high as if you were trading with the market direction. Now, if the market's choppy, that's not that important, but not considering current market conditions is critical. Over trading, again, lack of patience, very important. Trading your P&L instead of technicals, this is where you're watching your P&L all day long, and you see a stock go up, it comes down, you're going from winning 300 to losing 100, goes back up to winning 50, you bail on the trade because you're relieved that the stock's back green again. This is a terrible thing to do. You should only be entering trades on technical setups and exiting on technical setups. It has nothing to do with what your P&L is. You'd never get out of a trade based on what the P&L is saying, percentage-wise or dollar-wise, because that's not the key component here. So that's why I never suggest setting stops based on percentages or dollar amounts, because it has nothing to do whether that stock is still bullish or still bearish. Trading what you think instead of what the price says, I'm going to highlight something about this in just a minute. This is a huge, huge problem. All of the folks that traded bearish from April till August or September were trading on what they thought or what they heard or what they read. You know, there was just so much talk about the market should be correcting, it should be going down. Everything's bearish, the jobs are collapsing. So they biased to the short side, and they missed the whole 5 to 6 months of up moves in the market, and probably lost a lot of money on the bearish side. So please don't trade what you think, and just trade what the price says, or what you hear, or what you see on CNBC, or watch this on X. They're over leveraged, which means they've got too much risk. They can't stay in the trade as long as they should because they've got too much risk on. Not using the daily chart for swing trades, very critical. If you're trading long, the daily chart needs to be bullish. If you're trading short, the daily chart needs to be bearish. Otherwise, you're trading against the trend. Lack of patience, we've talked about this one. Forcing trades, that's kind of related to lack of patience. Attempting to pick tops and bottoms, another horrible error that you make. You know, Tesla fell all this big percentage, it can't possibly fall anymore. Yes, it can. Stocks that are hitting new lows typically will continue to make new lows. Stocks hitting new highs continue to make new highs, generally. Not waiting for confirmation to enter a trade. In other words, thinking that a breakout is going to work. This is a little bit more complex. You can take breakouts through resistance levels, for example, but it's probably better to wait for it to come back and test it again, so you get a confirmation of that. And FOMO, fear of missing out. All right. Now I'm going to talk about this, trading what you think instead of what the price says. This is a quote that I really like. This is from Stephen Hawking. And what he says is, the greatest enemy of knowledge is not ignorance. Not knowing about, not having no idea is not as a enemy of trading, for example. It's an illusion of knowledge. So when you're reading something in the paper, or you're reading on a social media, somebody's telling you what the stock's going to do, some talking head on CNBC is giving you some information on Bloomberg or Fox News, Fox Business, wherever it is, anybody like that, they don't know any more about the market's going to do than you do, right? That their job is to come up with this information, but it's no better than your guess. What you want to do is watch the chart, right? The price of what the stock is doing. The chart is what's true, what's real. So the greatest enemy of knowledge is not ignorance. It's the illusion of knowledge. And when you're trading stuff that you think, hear, or see, you're trading with the illusion of knowledge. Something that you think is going to happen, that there is no proof that it ever will. Okay? Okay. Now this is the SPY Super System software. I'm going to just get into it briefly here. This runs on Thinkorswim. It runs on Ninja. I have it on Thinkorswim. This is a chart right here. This is exactly what my chart looks like this is on a 5-minute chart on the S&P. But this is the SPY Super System. You get some scanners over here that come with the SPY Super System. This is a relative strength scanner, relative weakness scanner, swing trade scanner right here. Now, the critical elements out here that's really important. This is the actual oscillator that we're using, but this oscillator is a modified Laguerre. This has the divergence stripped out of it, right? So what we've got here, this oscillator goes up and down based on institutions coming into the trade, going out of the trade. This is a critical one here. This is the current time frame momentum. On a 5-minute chart, this is telling you what's going on right now based on colors, all right? So you've got colors being red and yellow, which are bearish, green and blue, which is bullish. This is telling you what the current time frame is. This is looking at 3 different time frames, the multi-time frame momentum. So you can see here that on the SPY here, on this particular day, it was bullish right from about 10 o'clock on, but the overall with multiple time frames, but the current time frame was flipping back and forth as the institutions come in and go out. Okay, so what we're looking for is to try to get in when the institutions join the current time frame. This is a long-term trend, right? So this is on a 5-minute chart. On a daily chart, these become this tells you what the daily is. This tells you what the 1, 3, and 9 day is, and this is a long-term trend, right? Now, up on the actual pricing of the chart itself, obviously you've got your candlesticks here. We have a few things that are critical. On a 5-minute chart, this is the most critical line right here, this pink line. This is the volume weighted average price. It's called the VWAP, right? And the next is the X15 exponential moving average, this little green line. These are our two levels that we use for intraday trading, for trading long and trading short. We would trade a stock as it breaks above the VWAP if the institutions were buying, just like right here, right? If you were taking a trade right here, you'd notice it goes from yellow selling to blue buying. See the move up off the VWAP right there? That's your long for the SPY. Now we also have these arrows. These are pop out of the box, or pop symbols. These indicate breaks of compression to the upside on the pink and to the downside on the blue. Okay, so that's those are the critical levels. Now we also have this pivot point. This is a pivot point. There's only one pivot point that goes on this chart when it's available, and the SPY super system creates this pivot point to let us know that there's a pivot point, which is a support or resistance level, but it's one I use to identify when I'm getting close to it. If I'm in a trade, I'm starting to take profits in it. All right, so those are the key levels here on the 5-minute chart. We also have the market internals shown by different colors here. This says green and up. This is telling me the market internals for the whole New York Stock Exchange is bullish right now, telling us that it's likely to be best trading long at this point in time. Right? It's called market internals. It looks at all of the volume when stocks moving up, minus all the volume when stocks moving down, and comes up with either a color here, which is in this case is green, which is very bullish, and that it's trending up. It can go to yellow, red, or blue as well. Right? So that's what you're looking at here. All right, this is the SPY super system setup. And this is the same thing. I just proved it. We just added this. This is the trend. Again, you see in this particular case, the overall market trend was trending down. It was yellow. It wasn't red. It was yellow, which means it's just trending to the downside. Right, but that's been added to this. And this trend up and energy level, I'm going to take off. They tried them out. They didn't really do much for me, so I don't use them. All right. And this is also, if you get the SPY, if you buy the SPY super system software, by the way, you'll get this template, and you'll also get this template with the scanners, of course. But this is for just folks who want to trade just intraday trades, like 0 DTEs on the futures or the indexes, or it's even stocks, where you're getting what's important, which is just the current time frame momentum, the VWAP, the 15 EMA, and your pop out of the box signals. That's all you need on that. And you can flip them back and forth during the day if you want to go with a swing trade. You would look at this type of a chart, okay, on a daily basis. Okay. And again, here's the color codes for the SPY super system indicators. Very straightforward. Green is bullish strong, blue is a bullish trend, red is bearish strong, and yellow is a bearish trend. All telling you exactly what the oscillator is doing, tell you what the institutions are doing right now. When they chop around from one to another, back and forth, you know you're getting a lot of chop. Right, so this, I just want to cover a couple of quick trades that we've taken recently, so I can identify. I'll show you what we're looking for. This was on NVIDIA that we took back in, I think, August. Yeah, back in August. So it was, you can see that it was bullish here. The trend was bullish. The multi-time frame was bullish on the daily chart. The current time frame was flipping back and forth here, but it went green here. What we waited for was a pullback. You see this pullback right here to this 15 EMA. That's what's called, we call it a PBO, a pullback opportunity, where the stock has come back down to one of our support levels, and now it bounced. This is where we took it, right there in that arrow, and we get out right here on this arrow right here, 32% profit in about 3 days on the long on NVIDIA. And notice it still stayed green. We could have stayed in it, but we decided to take profits on this little pop up here. We get out of that trade. All right, this was SMR. This was also on a daily chart. You can see what we're looking at here. This is SMR, pretty compressed. Here's earnings, these little dots here. This was a breakout right here, which is where we took the trade. Notice it went from yellow right here. It was, the multi-time frame was already green, but the current time frame went to yellow and then switched back to green, bullish right here. The oscillator popped back up to bullish. We took it right there, and we're in this thing, the 13th out of the 15th, 56% profit, 2,000 invested, and it created $1,170 profit. And I used 2,000 invested for all of my comparisons for profitability and results. Doesn't mean that's what you're going to trade. I just have to have some sort of a baseline to use. Okay. All right. And this was Tesla right here. This was a Tesla setup. Couple of you can see this is on a 5-minute chart. If you look at Tesla right here on this particular Friday, which is way back in the spring, I think. But you notice that it popped up here in the morning, and blue institutions went into buying it, and it ran right up through the VWAP. You could take it right there and take it off right there. That's a pretty big move, by the way. That's about 6 or 7 points on Tesla. And you get out, notice it went back to selling right here. You want to be out of the trade on a 5-minute chart when it switches back to yellow, but you really just want to wait for momentum to break. All right, this was a nice SPY trade on a 5-minute chart. If you look at the VWAP right there, see how when it went selling, yellow, buying blue, see how it broke above the VWAP right there? This is where you would take the SPY trade, right? You just take SPY calls, you ride it up, starts to lose momentum, you take it off. You don't have to wait for all the way back in. And you could have stayed in the trade, but if you're made this much money on this trade, I think it would be prudent to take it off right there, which is what I did. All right, and this is a Wendy's. This is a daily chart. This was a trade we took on a breakdown. I think you can see it here. Here's their earnings. All right, you see it's notice that when it goes from buying to selling right here, you take it right there on this breakdown below the 15. We were in it overnight. We were out the next morning right there because it went back to buying again. But it was still very bearish. Multi-time frame was bearish this whole time, as was the trend. Okay, so just to throw a little humor in here, this is a trader who's either traded on FOMO, jumped into a trade that had a reverse on him, or he took a trade that isn't working out, it's going against him. He's got no any idea of whether the institutions are in the trade or not. He can't use technical expertise anymore because he doesn't know what the institutions are doing. He doesn't have the SPY super system or a good methodology to trade with. This is trading emotionally. This is what you want to try to avoid, not to be trading with emotions. And this is folks who are trading unemotionally, trading with a solid methodology they know works over time, and they're looking at this chart which has the SPY super system information on there, and they feel good about it. All right. Just want to cover this quickly. Process precedes results. I mentioned this before, process before profits. What this means is it's important to understand that have a methodology that you understand and strategies you understand how we determine if institutions are in the trade or not. Learn those high probability setup criteria and strategies. They must become second nature to you before focusing on results. Don't be determining if you're becoming a good trader or a successful trader based on your P&Ls. Okay, it's not telling you that. There are plenty of good trades that don't make money and plenty of bad trades that do. But if you want to be in this for long term, then you've got to focus on the strategy and the methodology and the setups, and not focus on your P&L. I recommend you don't even look at your P&L during the day, right? Because it's gonna instill emotion in your trade. Okay, so this is the basic high probability trade setup funnel. This is the process we go through. This is what I look for when I'm looking for a high probability trade. If I'm looking for a swing trade, I initially make sure the daily chart's bullish if I'm going long, bearish if I'm going short. I'm not going to trade against the daily chart unless I'm just trading a quick intraday scalping type trade. If I'm doing that, then I'm just going to use the 5-minute chart. But this is important. Then I want to look at the trend, both the stock and the market trend. What's my stock doing relative to what the market's doing? Okay, is the stock moving up and the market's moving up? That's good, all right? But I don't want to trade against the trend. In other words, don't be trading against a bullish stock by going short. Now, this is the key thing right here. The SPY super system must be aligned. I've got to have the SPY super system indicators telling me that the institutions are in a trade, or I won't take it. You know, if it's a 5-minute trade, if I'm just trading a quick intraday trade, the current time frame momentum has got to show me the institutions are buying it. If I'm going long and selling it, I'm going short. If I'm going a swing trade, both the daily chart, both the current time frame momentum and the multi-time frame momentum on the daily chart, both have to be aligned. They both have to be bullish, or they both have to be bearish, or I don't take the trade. Okay? And then we look for stocks that have relative strength or relative weakness. Right? Take the best of those, and then we enter near support, sell near resistance. there's your criteria right here. That's and if the ones that fall out the bottom, maybe they're not near support, maybe they're not near resistance, but you can put an alert on. But if all the other things are being equal here, right, then you just try to find the very best one. And that would probably come down to relative strength and relative weakness, or how close are they to any kind of resistance levels on the upside, or support levels on the downside. Right, so that's it. That is the criteria for finding these trades. Now, the strategies we use in the options room and the alert service: straight calls and straight puts. Do a lot of straight calls and straight puts. We're in right now long calls on ABBV. We also do debit spreads using weekly options expiration. We do time spreads over earnings. This is a non-directional trade, these time spreads. We're just capturing volatility crush. These are very successful trades, and you know your risk is very limited. I will say that all the trades that I take and alert on have a defined risk. You don't have any unlimited risk on any of these trades. You know, if you're trading futures or anything, you can have a problem because of all the margin you take. But all of these, whatever you put into the trade is the most you can lose for the trade. Generally, you know, credit spreads are a little bit different. By the way, I also do straddles and strangles. These are non-directional trades, just trading for big moves. Okay, and this is one that would work on a day like yesterday, when you had that big flush down. You put a straddle or a strangle on a stock that's moving really extremely fast. That way you don't care if it bounces or if it continues down, you make money on it. As long as there is certain criteria for this. I have a video on this. There's certain criteria that have to be met, but this is a very successful strategy. We do weekly ATMs. This is a strategy where you take a neutral to bullish stock, sell puts against it every week to take in premium, meanwhile holding a longer term dated put at a lower price to protect yourself and cut down your margin requirements. And again, I have a video on this as well. This was one we had on Macy's. Macy's went against us yesterday, day before yesterday. We had sold puts. What we did was we bought back yesterday's puts, took a loss on those, but we kept the longer term dated puts out in November on the stock, and we ended up making profits on the stock, pretty good profits on the stock, because the stock continued down, and a long-term put that we had in November generated a lot more money than we lost on the short put that we covered. So that's how we can hedge a lot of these things. Okay, and we do credit spreads to capture premium, put credit spreads, call credit spreads, and the SPY super system. This is one that kind of stands alone. This is the intraday trades on the SPY, the Qs, the IWM, or futures. You can do it on the ES, the NQ. You can also do it on stocks. These are just very quick trades, high probability trades, but very quick off the 5-minute chart. I have a video on how to do these, but I can't alert on them. And I really can't post them either, they're too quick. But a lot of traders love these things. They work really, really well. Okay. Now the alert service, just to cover it, is designed for day trades and short-term swing trades, not an investment service. It's designed for traders who can't watch the market all day or don't want to. You're going to get real-time alerts on the highest probability trade setups, and that means trades that institutions are in. The market internals are in our favor. We're trading bullish. If the institution's in there buying, the market internals are also going up, gives us more indication that it's likely to work. And then we do technical analysis to find the best one. Okay. All right. This is my equity curve for this year, January through September. Yeah, it's been a good year, and I'll show you the results year by year so you can see that. Okay. Now I'm going to switch over here to doing some talk about Heiken-Ashi candles, and this is going to be, these candles look like, basically they look like regular candles, but they're constructed differently. Okay, Heiken-Ashi candles are made up of 2 candles. There's a formula for it, but this is British pound, Japanese yen, doesn't matter. This can be anything. I just want the candle description, the candle structure. All right, so this could be Tesla, this could be gold, this could be SPY, this could be anything. Any candle that has a flat top, okay, no upper shadow, they say, what I call a flat top. These are bearish Heiken-Ashi candles. All right, and you can see this is quite a bearish trend. Bearish Heiken-Ashi, bearish Heiken-Ashi, bearish Heiken-Ashi. Flat tops on each candle. Now notice that the candles always start in the middle of the previous candle, always. because of the way these are constructed. They always start in the middle of the previous candle. But these are flat top candles. These are bearish Heiken-Ashi candles. This whole trend is a bearish Heiken-Ashi trend. Even though we started to get a few wicks, it's still red. Now we're getting a wicks and tails here. So this, you can see the downward momentum is fading. You see the wicks here, oops, the wicks and the tails right here. Now, a Heiken-Ashi reversal candle is going to be when you go from a candlesticks with flat tops to a candlestick with a flat bottom, right there, right? That's a flat bottom Heiken-Ashi candle right there. This would be, initially, this would be considered a Heiken-Ashi reversal. Reversal from a downtrend to an uptrend, right there. Now, there's a caveat to this, and that is when you reverse from a trend down to a trend up with a Heiken-Ashi reversal, you want the Heiken-Ashi candle that's reversing to be as big or bigger than the candles that created the original trend. This is not. This is too small, right? Now, this would still work. You still would have made money on this trade, but this is not what I'm looking for. What I'm looking for is a move back up, and then you notice it reversed back down and went to Heiken-Ashi bearish right here, to a bearish and bearish, and then we went to a Heiken-Ashi reversal candle to the upside. Now, I'm assuming that this is because I want to be long this particular position. In other words, let's say the VWAP is down here somewhere, and it's come down to the VWAP and it's bouncing off of it. This is a Heiken-Ashi reversal candle that I want to take the trade. Flat bottom candle, bigger than the original trend. This is where you jump in and you get flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. You've got a nice trend. This is how easy it is to identify a Heiken-Ashi trend right there. Okay, flat bottom, get a wick and a tail, but still green. Flat bottom, flat bottom, flat bottom. Here's where you get out of the trade. You go to a flat bottom to a doji. Trend is over, at least for the time being. So you would take your profits. But you can see the trend, and you can see the different the Heiken-Ashi candles and how nice that is and easy to see. And you're not getting shaken out by any weird 5-minute candles anywhere inside of here, right? So that is those are what Heiken-Ashi candles are. Again, flat tops for the bearish, flat bottoms for the bullish. That's how you find reversals. Bearish trend to a bullish trend right there, and this is where you would enter. This gives you a perfect entry into a trade right there. Okay. Now, these are the distinctions of the Heiken-Ashi candles we just talked about. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. This is the most important thing to understand. If you're listening to this webinar and you want to know about Heiken-Ashi candles, this is important. Bullish Heiken-Ashi candles have flat bottoms. Bearish have flat tops. And you can set your candlestick setup to Heiken-Ashi on any platform you're on. You just switch from regular candlesticks to Heiken-Ashi candlesticks. Bullish Heiken-Ashi reversals are identified by flat top Heiken-Ashi candles, followed by flat bottomed Heiken-Ashi candles. Bearish Heiken-Ashi reversals are identified by flat bottomed Heiken-Ashi candles, followed by flat top Heiken-Ashi candles. And that obviously can be doji candles in between, right? So this was what identifies Heiken-Ashi candles. Understanding trends with Heiken-Ashi, again, the flat bottom candle it signals a strong visual uptrend. You can see the bearish trend here. This is one we just talked about, where it reverses, but the candle's too small, and it traps around. Now, if this was, let's say this blue line was your VWAP or some support level that you were looking for the stock to break through, it breaks through it right here on this Heiken-Ashi reversal candle. You would jump right into trade here. This becomes your stop, and up it goes. And that's a Heiken-Ashi reversal right there that you can take advantage. It starts to flatten here at the top. You get wicks and tails. You get a red candle, you're out. That's the end of the trend. You're out right now. All right. I don't have to go over each one of these things because you can see it right there. All right. So again, there's the distinction. We just talked about that. The recap of the advantage of Heiken-Ashi candles. It smooths out the price action, reducing noise. You're not gonna get shaken out of trades as quickly if you've got Heiken-Ashi candles as opposed to regular candles. Regular candles. I mean, listen. If you looked at the market yesterday and you saw what happened when the tariff news came out, and you saw those brutal candles that formed, just huge red candles. There's a lot of emotion that's instilled in you when these candles occur. But when they occur in the middle of a trend and they're just really noise, you don't see that with Heiken-Ashi candles. That's going to give you the ability to stay in a trade and not get too emotionally involved in it. Okay. It makes identifying trends much easier, as we've seen. It improves identifying confirmation of trends and trend reversals. This is what I use them for the most. Reversing from a bearish setup to a bullish setup on a stock I want to go long as it breaks through a support level or a resistance level. Okay, trend reversals. And again, it does help identify potential exits when the candle body shrinks or reversals occur. But typically what I do when I'm in a trade and I'm using Heiken-Ashi candles, I'll switch back over to regular candles when it's getting to a point where I feel like I want to take profits on it. Because then I can identify the reversal to the downside in a trade that I've been long. I can identify it more quickly. Okay, and I'm not looking for confirmation of the reversal because I've got profits. I want to take as much profit as I can. So I'm not interested in the confirmation. I just want to see that it's starting to break down. I'll take it off right then. All right. Now I'm going to show a couple of charts here. This is Uber. This goes way back to 2023. But the whole point of this is these are regular candlesticks. This is a chart of Uber with regular candlesticks. Now this is off my TC2000 platform, and I use because I can color code my candles there based on whether the Bollinger Bands are expanding, or in other words, whether compression is breaking out or not. So that's why you see blue ones instead of green. But this is Uber, and it's breaking up off the 200-day moving average right here. But notice this is what the regular candlesticks look like. It's pretty hard to catch on these things with these gaps. Now, if I go, that's May 1st. Look at May 1st right there. Let's go to May 1st on Heiken-Ashi candles. Here's your Heiken-Ashi candles. See the downtrend here? Heiken-Ashi reversal. The bearish Heiken-Ashi bearish candlesticks. Here's your Heiken-Ashi reversal to the upside. See how big it is? May 1st, this is when you take the trade. Take the trade on May 1st. Notice what's not on this chart. There's no gaps. See the gaps? No gaps here. This is where you would get into the trade, right on this candlestick. Right? You'd be in it right here, and this is the movement that you got. Right? Right up. Flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. Getting smaller and smaller and smaller. This is where you take the trade off. Right there. Based on the Heiken-Ashi candles. And you'd also have the TC2, you'd also have your SPY super system up where you could actually see if the institutions are starting to get out of it. But that is the difference between regular candles and Heiken-Ashi candles right there. Again, gaps, no gaps, gives you the ideas, but look at that beautifully defined Heiken-Ashi reversal candle. All right, I'm going to show some ones. Usually I bring up TC2000 to show them as well. They're down for maintenance today. So what I'm going to do is I'm going to use the SPY super system, and I'm going to show you a few stocks. Now this is a daily chart on Corning, and the reason I brought this up is we traded this a couple of times in August, in September. But what I want to show, I've got this set up on Heiken-Ashi candles, and if you want to see how to do that, you just go right here to style, candle type. You see how it's regular candles here, and I got it set to Heiken-Ashi candles. Right, so these are Heiken-Ashi candles. So what I'm looking for on GLW for a daily swing trade right here is I'm looking for a stock that's the institutions are going from selling, which they were right here, to buying, which they started to right here on the 21st. So what I'm looking for, and I don't use the VWAP on the daily chart, I'm just using the 15 here, but I'm looking for a Heiken-Ashi reversal candle. See the Heiken-Ashi bearish candle. This got a wick and a tail. You see the flat bottom right there? That's a Heiken-Ashi reversal candle right there on 8/22. So this was the entry for the trade. All right, we take this and then we follow it up. And you notice it kept putting in Heiken-Ashi bullish Heiken-Ashi candles, and we exit right here. Right, that's the trade. All right, this went from about $64 or $63.50, $64.50 up right up here to about $67.82. It was a beautiful trade in GLW, but this does this several times. This was a nice bullish trade. Notice that the multi-time frame momentum was all green. Current time frame momentum switched over to blue when we bought it right there. All right, so that's GLW, and I can move along further out. You can see it happened again right here. Okay, Doji, Heiken-Ashi reversal candle right there. Would been another entry to get into the trade. It was already green across the board. You can see the institutions are buying the heck out of this thing. So that's what it looks like in GLW. Now, if you take a stock like Tesla, for example, we go back to Tesla. Tesla's been very choppy, right? So this was Tesla recently, right? And it's chopping all over the place. See, you get this green, yellow, green, yellow. There's no trend here to really hang your hat on. Multi-time frame is pretty good. Current time frame is not too good here. Very, very difficult to do. Let's see. Yeah, let's try Google. All right, Google. So here's Google. All right, so here's Google yesterday. You can see how choppy this thing has been. Now it pulled down. There's a Heiken-Ashi reversal candle right here on Google as it went yellow. But notice it keeps switching back and forth on the daily chart. Yellow, blue. So I'm not going to touch it, but these are definitely bearish Heiken-Ashi candles. We go back and look, we're going to find some Heiken-Ashi, good Heiken-Ashi candles. This was back at the end of August. See how the tiny little candles, and we go from selling to buying right here, and we get a Heiken-Ashi reversal candle right there, but it's very small. Now we get a decent size one and a real good size one right there. Anywhere in here is a good long for Google, all right? And you can see what it popped up right there, and you would have stayed in it. Heiken-Ashi candles stay bullish all the way up until you get right here, 923 reverse. So for swing trades, that's a pretty nice. Okay. Question here. Hey Lawrence, do you have to wait for the first reversal candle to close before the entry? Okay, that's a really good question. On Heiken-Ashi candles, whether you're doing it on a 5-minute chart or daily chart, you don't have to wait for the candle to close, generally speaking. If you're in a daily chart and the Heiken-Ashi candle exists, the Heiken-Ashi reversal candle, and it's like 1 o'clock in the afternoon, you typically don't have to wait anymore, because it's the likelihood of it switching to not being a Heiken-Ashi reversal before the close is very, very small. Same thing on a 5-minute chart. If you're trading a 5-minute Heiken-Ashi candle, if you're watching it after you're 3 minutes into that 5-minute period time frame, and you've got a Heiken-Ashi candle, bullish Heiken-Ashi or a bearish Heiken-Ashi, it's likely 95% of the time it's going to continue. It's going to be like that at the close. So no, you do not have to wait for the close, but you do have to wait for the formation to be long enough to justify it. Right. So here's Google. Again, this was a beautiful long term in Google. Right. And I'm just randomly picking. I don't have TC1000 up for my scanner, so I can just randomly pick charts here on these things. Here's Palantir. Look at Palantir. It's had some pretty mixed trading here lately. Very choppy, very choppy. But again, there's been places where there was very bearish. Notice it went bearish right here. You notice the Heiken-Ashi reversal candle right here, right? It was in a bullish trend. Get a Heiken-Ashi, another big Heiken-Ashi candle below the 15. You take it there. You notice it went yellow. Right there, you take it short and you write it right down. Right, and you had a pretty nice run in that. But you're going to be out over here, but you're going to be out as soon as the momentum stops. All right, so that's what it looks like on the daily chart. If you go to a 5-minute chart, this is where we trade intraday trades, very quick intraday trades. Right, and one of the things that you would look at, like if you were doing intraday trades, if you're doing like this 5, is you're going to look for Heiken-Ashi reversals. Now, yesterday is a tough example because you had that news, right? Here's where the news came on the tariffs. See, it wasn't doing much before then. It was kind of just chopping around. But here's the tariff news right here, right? And you notice that it noticed what it did, right? With the Heiken-Ashi reversal right at the news, and it went from buying to selling immediately, and then very heavy selling right there. So that's the Heiken-Ashi reversal. Now, if you happen to take that, you probably would have waited until it broke right below the VWAP right here, right? That would have been likely where you would have taken the trade, because it did break below the VWAP there, and then the VWAP becomes your stop. And then when you put these kind of candles in, you take the profits. You don't want to wait for it to pull back up again. The institutions come in and started to buy again, but we know what happened. It pulled back again later. But that was the first really nice entry on that on the SPY yesterday. I'm trying to think of what I traded yesterday. I did trade a couple of trades yesterday off of some of these candlesticks and off of the SPY Super System trades. What was it? Just looking back at my notes. GWRE, I trade GWRE. All right, so there's GWRE back yesterday. and I took it and took it right in here just for a quick trade. Again, the market was coming down hard, but notice it went. They had but institutions buying in the 5-minute. I got a Heiken-Ashi reversal candle right here as it came through the 15 off the VWAP. I just took it there and I wrote it up here. Now that doesn't look like much, but that was 238 something to 239 something. I made about $1.25 a contract on the calls that I took, just in that quick move. And it actually had another one later in the day, right here. See, it was still green. Remember, the market was very bearish yesterday. Look how this buying. So this is where you can tell that the institutions are really buying the heck out of this thing, because if we look at the SPY yesterday at 1420, is the SPY at 1420? Doesn't look like there's much buying going on there, does it? But GWRE, how can this be green like that? Because the institutions were buying this one. They were buying it here. That's why. Okay. Talk about scans, Van. Well, with scans, I use scans in TC2000, which is a charting program I use, and then I use scans here on the SPY Super System, which I have several of them in here. The ones I keep generally is this one, cascading up. This will look for stocks that are stacking 3 green candles or more on a 5-minute chart, or you can switch it to a daily, and it's going to show you stocks that are stacking 3 green candles on a daily chart. In other words, the high each candle was higher than the previous high. So you can look at cascading up. What I consider relative strength on 5-minute or relative strength on the daily. This has relative weakness on the 5-minute, relative weakness on the daily. This is right here is showing scans stocks that are the potentially long swing trades. Right? Obviously, there isn't very many after yesterday, right? Long swing trades would be the ones that this would show. And I can just, if I switch over to a daily chart on here, off the scans, and I just click on these, it's going to show me them, right? There's FAZ, which of course is a bearish leverage ETF, and KOLD, which is here. But you notice on KOLD, this is showing it as a potential long, but notice you can't take it long because your multi-time frame momentum is still yellow, right? And again, I do have a lot of scans on TC2000 that I use to find Heiken-Ashi reversals, etc. But that's how you would use the Heiken-Ashi candles on a 5-minute chart or on a daily chart to find longs and shorts. Okay. Do you have to use TC2000? No, you don't need to use TC2000. A lot of people don't even, they use TradingView or nothing. They just use this. You can generate a lot of different scans in TOS. I have a lot of other ones in here. I've got one that's looking for the pop out of the box symbols, the pink arrows and the blue arrows for the daily or the 5-minute for bullish and bearish stocks, showing you compression breaks, things like that. I don't want to get into all those things. There's a lot of these things that are, there's quite a bit of information here. And again, if you get the software, all that stuff comes with it. But this is the key thing. What are the institutions doing? And that's really important. All right. Do you give scans with the software? All these scans, you get the software, all the scans that come with the software, cascading up, cascading down, 5-minute and daily. You've got one here. It's called an RLT scan. Let me see if I can find it real quick. See this, the RLT scans, where are they? All right, the RLT. This is a RLT scan right here, and then RLT 5-minute scans. Those are looking for stocks that are breaking out with compression breaks on the upside and the downside. It shows them both in each one of those scans. And this is a pop out of the box. That's this daily. If you're getting a pop out of the box, which is that pop signal on the daily chart. We've got some others in here that I'm testing out, but those are the main ones. And these are the ones that I think are the most useful. On a day like yesterday, if the market's coming down hard and you happen to be interested for looking for a long, you'd run the cascading up scan. You'd have it up here. Stocks that are green and showing up on the cascading up scan, we're obviously bullish for the day, right? In fact, let me switch back to regular candlesticks. All right, would be bullish for the day. So let me go ahead to 5-minute scan. All right, and you're going to find that you see how this switch was cold. It was bullish right here, even though you wouldn't be taking it because you notice even on the 5-minute chart, it's below the VWAP, you wouldn't take it. But these were bullish charts. That's a pretty nice bullish looking one as well. In Glasgow, it's tractor supply, looks good. So that's going to show you, even when the market's going down, these are going to show you the relative strength. This is going to show relative weakness. Now, there's going to be a million relative weakness stocks yesterday because the market was so bad. There's Oxy coming down, CNQ coming down, Neogen coming down. This is on a 5-minute chart. Real coming down, next coming, all these bearish. Notice they were all green. So what you do, if you're looking for stocks that are the strongest, you switch to the stocks that have green for the day. On the here, all these are green for the day, which means they're up for the day, even on a bad day like yesterday, and they're cascading up right now. All right. So that's how you find this. Exactly the vice versa here. Looking for cascading down, you're going to go stocks that are bearish for the day, which of course just about everyone on this list was. There was some green ones in here, surprisingly enough. QTTB, the quantums. All right, so that's how you can use those scans. I don't want to, again, I could spend a lot of time on this. I'm not going to do that right now because all of that comes with the software, all the scans and all of the videos I do on every one of us of our indicators and every one of our strategies and methodologies. We have videos on. Okay. All right. So I'm going to take a look at these results here. I'm going to run through these fairly quickly. I just kind of want you to, there's a couple of things I want you to take away from this. Again, this is a SPY Super System Options Room trading results. All right, so this is 2023. Now I'm using $2,000 per trade as a baseline. Obviously, you don't have to do that. I don't trade the same amount every trade, but I have to have some way to judge, results, comparison week to week, trade to trade, month to month. So in 2023, investing $2,000 in each trade taken in the room. It's called still the Compass Options Room. Back then, it's the SPY Super System. Produced a little over 60,000. That was about 5,000 a month. That was our average for the month in 2023. 2024, we produced about 55,000 at 2,000 per trade. That's about 4,500 per month. And 2025, I just calculated this through September. We're up 47,765, a little over 5,300, which I think is our best. Yeah, it's our best year so far. But you notice that the results stay fairly close. Again, we're trading a very high percentage win rate, and the difference in profitability is much more related to whether you have a trending market or a choppy market. We had a very good year in 2022, the year we started, which was we had 16 months of bearish market. The market was going down for 16 months straight, and we made money every single month during that time. All right. So this is just something I wanted to point out. I was talking about how the tariffs news yesterday flushed the market. Dow was down about 900. The SPY was down about 200%. Huge drop. Well, back in April when this happened, when we had all this volatility, when the tariffs were on, the tariffs were paused, we had 4 trades on, only 4 trades. And the SPY was down 10% in 2 days, by the way. The market was down 10% in 2 days. We had AVGO, which is Broadcom. We get in for $75. These were all short, by the way. Broadcom, we get in for $75 a contract, get out for $104 a contract. 39% profit. All right. Nike, we're in Nike for $285 a contract. When they put the tariffs on, Nike got hit particularly hard because they do all of their production in Vietnam, and they were talking about a 39% tariff on Vietnam. We get in at $285, we close it for $9. I mean, this was the best trade of the year. Huge trade, and we got lucky because of it, but it was definitely set up bearish, and I'll show you that one. We had Sarepta in for 450, out for 8, 78% profit. These are pretty good profits. Most of our profits come in more along the line of 20 to 50%. And NNE entered for $1.80, out for $2.25. That's fairly common. 25% profit in NNE. These are the only trades we had on. These are in the room. These are all alerted. All of these came out. This is the only trades we had on during that big period of time. And again, people were getting clubbed. People were getting margin calls. Retail traders were getting blown out of the market. This is what we did. And again, we had some luck on this Nike one. I mean, I'll admit that. But we were set up short because of what was happening. All right, so this was June of this year, just to kind of bring you up to date. I was on vacation for a couple of weeks. So we didn't have a lot of trade results, but we had 10 trades, 10 wins, 1 loss, 91% win rate, 37.90. Notice the percentages. 20, 23, 25, 17, 33. Again, these are the kind of ranges you're going to see on profitability on the trades that we take. And we do have losers. Believe me, we have losers. Everybody has losers. So, you know, I hear this all the time. Do you know we're down on this trade? Yes, I know we're down on the trade. I'm in it. I mean, all these trades that come out here with real money. This was July. This was a big month for us this year. We had a lot of good trades. There was a lot of good setups. We took a lot of trades. You can see we had, again, you can see the percentages here. We did have Sarepta win 66, but generally speaking, with the 20, 30, 40%, that's normally what you're going to see. 10%, that's what you're going to see on trades, right? July, 30 wins, 3 losses, a very big month for us. 91% win rate, $16,829, a very big month. This is not common. Months of, you know, 3 to 6 or 7,000 are much more common. August, 20 wins, 4 losses, 84% win rate, 59.60. And this was September. As of the last time I updated it, I didn't go through the whole month yet, I don't think. Yeah, this we had 12 and 2, 86% win rate, 29.64. September ended up at about, I think, a little over 4,900 for September. But again, you can see the percentages. 25, 33, 13. You're not going to get 200, 300, 400%. Most of the trade spreads, no, not really, Ed. They're not. Most of the trades are, we do credit spreads. We do some straddles and strangles, but most of these you saw in here were, these were straight calls or call debit spreads, but mostly straight calls in these particular cases. Okay, so those are the results that we had for September so far. October, we had a couple of losing trades, but we just put in some really good trades this week, so that worked out. So this just, I'm not going to go through all this. I've got this information here because I've been accumulating it over time. But here's January 2024. Again, 20 and 2, 90% win rate. You can see what we got here. We did have a 96% win in Boeing and a 100% loss in Gilead. Sometimes you get a 100% loss on options if you get a news event that comes in and drops your stock really hard. But news events work both ways. You know, they can also not send the stock up. One thing I say about the trades that we take, if we're in a trade long and we get a gap up in the morning, one of the sayings I have is gaps are gifts. If you get a gap up on a stock in the morning, take the profits, right? And 2 reasons. 1, gap ups, the least likely thing they're likely to do is do what's called gap and go. They generally don't do a gap and go. They'll do a gap and a chop or a gap and a drop. So you're better off to take profits at that point in time in the gap up. The second reason, and a lot of people don't understand this, when a stock gaps up in the morning, it's moved a lot, right? The volatility of the premiums gets raised, which means the premium on the options are higher than they normally would be right at the open. So if you take an option off at 931 for a nice profit, and the stock doesn't move, and you look at it at 950, even though the stock hasn't moved down, the option prices will have dropped because the volatility will come out of it. So that's just something, gaps are gifts, take advantage of it. So here's January, here's February. I'll just run through these pretty quickly. This was a pretty good, February was pretty good 2024, but this is fairly old stuff now because it's a year and a half old. But again, we did 92% win rate, 11,745 was a good month. May, these are some time spreads that we did on earnings right here. Most of the rest of these are straight calls. 15 and 2, 88% win rate. So, I'm not going to run through these. I just want you to see the percentage gains that you're typically going to see. All right, June, July. Again, now we only had 75% win rate in the alert trades those months, 12 and 4. Still netted 3,300 from the alerts, 6,000 in the room. August, decent, 89%. September, like only losing month in the last 2 years. More than that, I think, almost 3 years. We had a losing month September of last year, 8 wins and 5 losses, couldn't put much together. 62% in win rate, which to me was an embarrassment. Probably the lowest win rate I've ever had. Lost 1,786. That's, to me, with that win rate, that's still pretty good. And the alerts were down only 295. Now compare that to what we did the next month, which is in October, down 1,786, up 74.48. It was 17 and 3. And again, that's a lot of it's dependent on the market. So this was a pretty good month for us in October. All right, November was good. These are January, February, March, and April. I'm not going to go through all of these. We had winning months every month. Okay. Just to kind of let you know what the alerts look like. Ed, this is a good question too. Do my videos explain the rationale for what type of options you select for the trades? They'll go into the structure of the trade, the particular options that you take. I will tell you that if you're going to go long calls or long puts, you want to be taking deltas somewhere between 65 and 75%. Okay, that was what you want to do for straight calls and straight puts. Have a delta of 65 to 70. Please don't be taking out of the money calls or out of the money puts. They're cheap. I know they're cheap. They're cheap for a reason. That you get nothing but time decay and volatility crush on them. Taking out of the money calls or in the money puts, hoping that the stock is going to get up to your strike price is it's fool's gold. That is a losing strategy and always has been. Okay, is it safe to use credit spreads in all situations? Well, yeah, I think you could say it's safe to, but the timing is very important. Credit spreads have to be structured in a very specific way. All right, very specific way when you do a credit spread, because in a put credit spread, you're selling a put and buying a lower price put. You want the put that you sell on a credit spread to have multiple levels of support above that strike that you take. And I do have a video on all of that. Now they're maybe safe to take most time if you structure them correctly. The problem with credit spreads is sometimes you can't get enough premium to justify it. All right, so that's really important. And debit spreads, for example, are a way to reduce the cost of your bullish trade if you do a call debit spread. But you got to remember, when you do a call debit spread, you're buying a call and selling a higher price call on it. That's going to reduce the cost of it, but it also limits your profitability to the distance between the two strikes. You know, you can't make more than what the distance between if you've got a $5 strike between your two stocks, the maximum that debit spread can go to is $5. Okay. All right. So again, on the alerts, this is what they look like when they come out. This was an alert, the Nike alert of that famous Nike trade. The first thing you would get would be the date, the ticker. And this says buy April 11th, 67 puts for 285. So there's the date, there's your ticker, there's your expiration date, and there's your strike price. All right there. Then the next thing you would have got was an alert that said that with this added onto it, sell order for $9. I'm telling you to set a good till canceled sell order on it at $9, and then you're going to get one that says they were sold for $9 on April 3rd. That's what you see. And there could be other alerts with this if we adjusted the sell order. Okay. So again, that's how every alert includes stock symbol, option strike price, option expiration date, and the price to pay. Okay. I'm going to not spend a lot of time on this. How do we achieve these stunning results? Well, I've showed you already. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. Pretty simple. That's telling us when we have this information, we know what the market's doing. Now we have to take the market direction into consideration. Choppy days, much different to trade than on trending days, right? Much different. And we only take trades when both of these are in our favor. Not 100% true. I'll take trades if the institutions are in them, as long as the market internals aren't against me. Okay. And again, what the SPY Super System is looking at is we're actually looking at three different things. Momentum is the most critical thing here. And a lot of people don't understand what momentum is. It just doesn't mean you're getting green candles. There's more to it than that. But the software is looking at momentum, it's looking at trend, it's looking at some money flow, and it's looking at it across triple screen assessment, fancy way of saying multiple time frames. Okay. All right. So this is again, this is the chart we looked at earlier. That's just the actual SPY Super System right here. This is a template. This is a new template that you can get both of these. You can switch through it from back and forth. You'd use this for swing trades. You'd use this for intraday trades if that's what you want to. You can use them both for intraday trades, but if you're using intraday trades, you'd just be looking at the current time frame momentum. And if you're doing, a lot of people just want to do scalping trades, this is what they use. Current time frame momentum, VWAP, 15 EMA, and your pop symbols. That's all. That's all you need. This was a trade we took on the Qs. We took it right here. Notice the cues are this is a 5-minute trade. This is a 5-minute chart. Cues were being bought here. They turned to selling right there at 11:45. See where I got that blue arrow? That's where I entered the trade. Notice it's breaking down below the 15 EMA. It's below the VWAP already, below the 15 EMA as it turned yellow. Momentum is showing, the institutions are indicating that they're starting to sell based on the momentum, right? So you take it there, kind of moves sideways for a while and stays below the 15, and then it falls apart and down you go. And this is a really nice long trade. This is very unusual to have a SPY super system trade on one of the indexes that lasts this long. But you might have taken profits here, but if you stayed in it, it worked well. So there's your setup. The SPY super system trades that I've just mentioned right here, which is on 5-minute charts for the SPYs, the Qs, the IWM, the futures. These are the results we've had doing that since a year ago, July. I set this up because it works beautifully, but I can't call them out. So I did a video on how to find these. And if I see one set up during the day, I'll point it out because I'll take a lot of these, but most of the time I can't call them. But I have a video on them, and I have a lot of people in the room now using this because a lot of times when the day's slow, we can't take any swing trades. This gives us an opportunity to satisfy people that are impatient and want to trade, but they only still take the very highest probability trade setups. So this has worked tremendously. I've never had a losing month with this since the time I've been doing it. But you can see, like in August, 56 wins, 6 losses, 2 scratches. That's a lot of trades compared to what we take. But that's because we're just trading off a 5-minute chart, and we had a lot of setups that month, right? September 43 and 2, again 33 and 4 in October. But this system has not had a losing month for me. Now these results that I get, because I can't post these and I can't alert on these because they're too quick. But you can learn this using the SPY super system and take the trades yourself. And we got a lot of people in the room that are doing this very, very well. I had one member the other day that's been trading for a long time. I've known him for quite a few years. But anyway, he's been in the room for a while, and he's been trading mostly these SPY super system trades, and he's trying to go full time. And he told me that he just took his first paycheck out of the market this past week, a weekly paycheck for the first time. And he was extremely happy, and he should be, because he's really worked hard to develop this, and it's working for him. All right, so again, this was the SPY super system. I'm not going to continue to go over this. We've had October, November, December last year. We did great, but the results of the SPY super system and the results of the room are completely separate. This is not included in this. This is not included in this. These are 2 separate methodologies. This is the ones, if you took these trades, these are the ones I posted in the room. If you took all the trades, this is what you made on 2000. This is what you would have got. This is what I got. I don't know what you would have had because you did the very quick trades. You would have had to be based them on your own price reading ability, basically. Okay, and there's November, there's December, there's the whole last quarter last year. 87% win rate on the SPY super system, 86% win rate on the room, 24,000 on the SPY super system, 17,000 in the room. A lot more trades, 156 and 24. 44 and 7. But the SPY super system does really well because you're getting in right at the VWAP or right at the 15 EMA. So if it drops below there, you're out of the trade. So your losses on these things are pretty small. The profit factor, if you understand how profit factors work, profit factor of 1 means you're even, you break even. 2, you're getting twice as much wins, twice as much money than you lose. This has had a profit factor over 4 on the SPY super system. The regular trades have a profit factor right now of about 2.7. Okay, so here's the SPY super system here. This is the trade we took. Again, just so you can re-emphasize this, we're looking at the current time frame momentum, right? Went from red to blue right here. The market broke up above, the SPY broke up above the VWAP right there. You take the trade right there. The VWAP becomes your stop, then the 15 becomes your stop. You ride it up. You start to get compressions taking over. You start to get some red candles, get out of the trade right there. That's what we took. And $220 of profit per contract, that's a lot. That's not normal. Normally, you're going to be looking for between about $70 and $120 per contract profit on these trades. Right, so there's a SPY super system there. Here's another one here. I was in for 1 candle in here, out here. Notice it was yellow already. I took it on this pop out of the box, breakdown off the 15, in and out. $90 profit. in just those two candles, right? This is that same trade, looking at it on the new template, right? Blue buying, red, yellow selling, take it here, get out right there, right? Big tail on the thing, you get out. All right, this is it again. There's a new SPY super system setup. I think you can see this. We're just trying to let you see what the setup is like. This is an older one. I didn't even have the gear on here at that point in time, but you can see the clarity of where you can take that trade. Breaks below the VWAP, red candle, current time frame momentum red, take it short and write it down. Okay, so now we're looking at some regular trades. These are trades that are not SPY super system trades. These are trades that would have been set up for intraday trades or swing trades, but they would be alerted in the room and posted in the room. This was on a line. Now this was on a 5-minute chart. It was actually set up to be taken as a swing trade, so you could have held it overnight. But I took it here, and you notice we went from buying. See the green buying right there around 10:30, 10:45. Went to yellow right here. The indicators coming, the momentum indicators coming down. Took it right there as it broke below the VWAP of the pop. See, because it's not only is it selling, we're also breaking out of compression. Take it right here, and we were in this thing for 1 hour. We made 51% on this trade, and I had structured it basically because we could still held it overnight, but we decided to take 51% on this move right here. And you notice it went back to blue down here, but it was red this whole way. Nice trade there. This was URGN. This was a daily chart, right off the daily chart. Here is selling, red, with green buying. This is multi-time frame, current time frame. Now over here, the current time frame has gone back to buying, and what we're looking for is a break of compression, which we get right here on this big pop on this candle. That's where we take the trade right there. Entered 717, entered 710, out 717. We're in it for a whole week for 48% profit. It didn't do much right after that, but notice, even though the market was moving sideways or the stock was moving sideways, notice that the institutions were still buying the heck out of this thing. It was blue and green the whole way. So there's no reason for us to get out of the trade, and then we get the pop we wanted. All right, NVIDIA, this I showed you already. This was the PBO, the pullback and a bounce. SMR, I showed you that one. This was Nike. This was the one we had that big move in. This is where we took it. See how it's compressing here? Notice the institutions are selling on the multi-time frame and selling on the current time frame. Pretty easy to see that they're selling. This is a compression. We take it right here. Now we actually were up money that day, and I think some people actually took some profits on it that day, but it was still red. We stayed in it. It didn't do much for the next couple of days. And again, I don't use the VWAP on the daily chart. Moved, but it stayed below the 15. Stayed in it, and here comes the tariff announcement. Wham! Gap's a gift. Gap down's a gift. Gap down, we took it in the morning. As soon as it opened, we were out of the trade. And then it bounced right back up again as they took the tariffs off. So there you go. That's Nike. Here's Sarepta. That's another one we took. You can see the compression, the breakdown. But look at this. How the institutions selling this thing. It's obvious to see that they're selling here. I mean, it just doesn't take an awful lot to see that. This was a nice long in HIMS that we took. I kind of missed the real entry on this thing. I should have got it in it back here, but I didn't see it till here, and I took it here, made 25%. I did leave a runner on, but I didn't put this in any of my results. I had 269% of some runners, but that was just kind of lucky. Okay, so that kind of covers the charts, it covers the strategies, it covers the methodologies, it shows you the SPY super system. And remember, the results were got because they're so good, but it's the SPY super system that's driving these. Do I use Heiken-Ashi on the SPY super system? Yeah, absolutely, Patrick. Now, let me make a comment about that, about using Heiken-Ashi. If you're in on a 5-minute chart, if you're in a trending day on the market's trending up, which means if you get a reversal, the stock comes down and bounces off the VWAP and heads back up again. If you wait for a Heiken-Ashi reversal, the stock, that particular trade is going to fail fewer times than if you just took it right off with a regular candle. All right, but you're getting in a little bit later because you're waiting for the Heiken-Ashi candle. But if you're in a trending day, that's all right because the stock is likely to keep going up. Now, if you're in a very choppy day, at least the way I trade it, when it's a choppy day and I get a pullback to the VWAP and a bounce on a regular candle, I'm going to take it. All right, I'm not going to wait for a Heiken-Ashi reversal because of the fact that on a choppy days, a lot of times I'm only going to be in the trade for 2 or 3 candles. On a swing trade, I'm on a trending day, I might be in the trade for 6, 7, 8 candles. So I can afford to wait for a Heiken-Ashi confirmation to give me more confirmation that the trade's going to work. But on choppy days, I'll usually not use a Heiken-Ashi candle on a reversal on the SPY. Okay, I hope that helps a little bit. Lawrence, do I trade the NQ? I don't, but a lot of people in the room do. But I do trade the Qs. I mean, they're more volatile. You know that if you trade the Qs, you know, if you trade Qs futures, the NQ, you know that they're fairly volatile. You can make a lot of money on them. You can lose a lot of money on them. You know, one of the big advantages when I'm doing the SPY super system, if you were trading, like if you were trading the NQ and the ES and maybe the Russell on the futures, I think what you want to do is, what I do is I look for which one is performing the best that day. You know, if the SPY's up more for the day than the Qs or the Russell, I'll take the SPY as long as it's not close to any kind of resistance level. So I take the strongest one of the indexes to make the trade. Now, why I like trading stocks even better is because stocks, you can use relative strength, relative weakness to the market. You can't really do that with futures or with indexes. But with stocks, if I'm trading a stock like Tesla, for example, the market's up 0.1%, Tesla's up 0.5% and outperforming the market, I've got relative strength in Tesla. It's likely to outperform the market the rest of the day, or at least part of the day. So I'd like to take relative strength. It gives you one additional criteria that's going to increase your profitability and your likelihood of being profitable. Is that. Okay? All right. So again, here's the strategies we use. This is the strategy that I don't post. A lot of traders use this. I take these a lot, but they're too quick. They're off the SPY. Qs, IWM, SPY. You can use the ES, the NQ, the RTY. You can use anything. I mean, you can do it on commodities. You can do it on gold. You can do it on oil. You can do it on silver. You can use it on anything you want. But these are the ones that we take in the room that I post. All right? Straight calls, puts, calls and puts, straddles, strangles, debit spreads, time spreads over earnings, which we're going to be getting into this coming week. These are very, very successful. Again, 85 to 90% win rate, and some of the results have been really good as far as how they produce. All right, and so those are the strategies. This is the offers. I know I've spent a lot of time on this. This is the offers that they're offering right now from Rightline. There's one here that's really particularly good. For anybody who wants this to come in for a free trial, you get 2 weeks. It gets you the alerts. It gets you into the trading room. You'd be in the room all day long. You do get to look at the videos, the trading option videos, and then after 2 weeks, it rolls over to $3.96 a quarter. All right, after free 2-week trial. Now that's what you're going to pay, $3.96 a quarter. Right, you're not going to, unless you want to upgrade to one of the other deals afterwards, you can, but you're paying $3.96 a quarter. There's a one-time payment for just the alerts. If you're just interested in the alerts, this is a one-time deal. This is for forever. You get the alert service forever. You get the videos, and you also get into the Discord room. We've got 2 professional traders in a Discord room as well that answer questions, post charts, a lot of really good information. That's at $24.96. Now this one here is really to me, this is a no-brainer. This for $24.96, same price. This gives you the access to my trading room forever, the live trading room forever. It also gets you the SPY Super System software that we just talked about. It gets you that forever with all updates to it. Any changes we make to it, you get that forever. Okay, you don't have to renew it each year. You also get all the training videos and the Discord chat. We're all in days of all the trades I take, by the way, that I post in the room are also posted in the Discord room. Right. So this is to me, this is the deal of the century, and $24.96 for the room and the software. If you want to get something, if you want to get maybe a year instead of the full time, the one time, you can call Rory. I mean, you want to call Rory at 786-732-4656, and he'll talk to you about some of the other offers that you can get if you don't want to take those. But to me, this is, I'm telling you, the SPY Super System changed my trading. I went from an 80% win rate to an 88% win rate overall, just based on that, by eliminating some trades that I would have taken and I didn't take. Major difference. And now with the SPY Super System methodology for the 5-minute charts, the intraday charts added to it, it's even so much better. But so this is what I would look at. But again, you can take any of these in the chat box. I think Rory has posted links to links to the offers right there that you can get. This is something I did. I wanted to look at what my return on subscription investment was, and what I did was I took what the maximum amount you could pay for annual subscription, which is $1,600. That would be 4 quarters of $396 a quarter, so about $1,600. That's max based on quarterly pricing. Average trade size 2,000. Assume all trades taken. The historical results up through the end of August. 40x return on investment per year. So your return on the investment being what your subscription is, you're getting a 40x return per year. So the annual profits have exceeded 40 times the subscription cost. To me, that's pretty spectacular. And the subscription has consistently paid for itself many times over. Again, ROI, simple math, proven results. I just think this is kind of capsulizes what this system has done. And again, there's Rory's number, 786-732-4656. And again, if you have any questions, again, give him a call. Again, here's the deals. I hate to call them deals. Listen, I'm a professional trader. I'm not a professional presenter. I'm not a marketer. I just trade. I love trading. I trade for a living. I love to help people learn how to trade to become better. You don't have to do this for a living. You can do it to try to make some extra money every month. But this is what works. So again, I look forward to seeing some of you folks in the room. Thanks so much for being here today. I really appreciate it. And again, I look forward to seeing some of you folks next week. Have a great weekend. Enjoy the weekend, and see you on Monday.